Well, good morning. This is Richard Smith. Had another interesting day in the interest rates in the bond market. Again, this is our long-term trend, really since June. Wednesday, Thursday, Friday, and I did a post on this yesterday or last over the weekend. We had a steady dip in the bond market, really on the basis of some very light good news, very light good news, and actually even mixed news. But the investors just pushed the bond market down and, of course, pushed the stock markets up. When the bond market goes down, remember, interest rates move up, move higher. And we've had this decreasing interest rate, increasing bond market for several months, at least since June, actually before that. Yesterday, the stock market went down pretty steep, and the bond market took a jump back up into this range and established a new high level. What I've read is that most of that movement was based upon concerns over European debt. And I will tell you today the stock market futures are up, which would push the bonds back down and continue this trend of increasing interest rates. So the question is, what is the sentiment of the investors, whether they're going to continue investing in bonds and pushing this up, which has become known as, they're calling this the bond bubble. Today, the president will talk about a new stimulus package in the range of $200 billion. My concerns about that is that his previous stimulus packages have not turned the economy, and the economy is slowly moving towards improvements on its own. This stimulus concerns me a good bit. If the purpose of it is stimulus, if the purpose of it is to create jobs, the government does not create jobs. The other report due out today is from the Federal Reserve, the Beige Book, known as the Beige Book, which is just some stories about what's happening in the various 12 regions of the Federal Reserve System. So we'll see about that. It comes out at 2 o'clock. And how the markets respond to that, it's going to tell the story for the week, at least up until, well, tomorrow's Thursday. And it's been a short weekend. And tomorrow we've got the unemployment report, and that's the real information. We'll see how that comes out. But if you're thinking of floating, I just want to state this. While you may be in the general trend over the last 3 months, you are running counter, I think, to what the investor sentiments are. The investor sentiments, to me, with this drop, seem to tell me that they are trying to move back into stocks. They're trying to move out of bonds because bond prices are so high and their yields are so low. Have a great day. I'll update today on my Facebook page. And we'll watch these rates